Hello and welcome to Market Insights by Maximum Wealth. I'm Manoj Trivedi, joined today by my colleague and Chief Investment Strategist Ram Meduri. We are recording this episode on May 8, 2025, just days after the escalation of conflict between India and Pakistan following the tragic militant attack in Kashmir and India's subsequent missile strikes.
Hi
Hi
Manoj,
Ram.
yes. Hi Manoj. Indeed, we have a set of interesting yet concerning developments that have significant implications for the economy, markets, geopolitics, etc. So let's get on to this podcast to discuss what this conflict might mean for uh, India's economy and the market. I don't think people are really fascinated by Pakistan's economy as such. So that we can understand and share with our listeners what is the potential impact on their investments.
So the markets seem to be relatively stable, Ram, despite the hostilities. uh, with very limited immediate reactions to the missile strikes. What are your thoughts on why we are seeing this measured response?
That's a great point, Manoj. Historically, we've seen that India, Pakistan skirmishes have been more noise and less action. A lot of jingoistic blabbering on both sides, etc. But we've seen that over the last few years, India has become more and more wiser in handling these transactions or interactions or skirmishes, whatever you call it. India has definitely been more measured. They have given a very strong response to the current attack, which was triggered by the barbaric killing of 26 Indian uh, tourists who went to the Pahalgam Valley. And unfortunately, they were asked for their religion. They were asked to cite religious verses and then shot at point blank. So India had no option but to react. And uh, you know, uh, it's what is happening is a logical outcome of what India said they will do. Pulwama resulted in Balakot. We did go and bombard their terrorist camps. They did react with some air fights. And after Wing Commander Abhinandan was captured, he was later released when India threatened missile strikes. So compared to 2019 or later, this action is more forceful and it is still unfolding. Interestingly, the Indian rupee is relatively stable. Bond yields are also stable, unlike uh, in 2019, bond yields increased temporarily. But now we see that India has a $4 trillion plus economy size, and our trade volume with vis-a-vis Pakistan is minuscule. So there is no economic disruption that we are seeing as such because of this war as such.
Yeah, but how do you look at it from a longer term perspective? Uh,
I'll share my views and you can share yours, Manoj. You know as much about this topic, or perhaps more than I. I think India doesn't want to get into a prolonged conflict at this point in time. The prolonged conflict could mean a drain on the economy. There's a lot at stake. In fact, there are speculations that some higher powers deliberately engineered this so that the tariff deal for a lot of manufacturing that is supposed to move to India gets slowed down or scuttled. So there are global agencies who will immediately say, yeah, no, India's rating has come down, etc. Credit metrics are down, etc. Moody's recently cut down India's GDP forecast to 6.3% for 2025. Earlier, it was 6.5%. So, there are people waiting to pull India down. The ecosystem is not necessarily working in favor of India, but India has to handle this crisis on its own. And I definitely don't want a very long drawn war from an Indian perspective. India can, of course, ring fence itself and make the exercise and pain for Pakistan long term, unless, until Pakistan succumbs eventually.
yeah, but I my view here is that we are unlikely to see some long-term solutions. Neither are we going to see Pakistan split into parts, nor are we going to see long-lasting peace. Uh, Border tensions will continue, and there will be uh, occasional, bouts of cross-firing or whatever, and that environment of tension is going to be there for a relatively longer period of time, and that will become the new normal. And markets will eventually adjust to this new reality. So it is not going to be what it was earlier, despite the vast difference in the economic strength of the two nations. Uh, War never benefits anybody, so there will be a negative impact on both the economies. Having said that, India has a much more resilient economy, and it should be able to absorb this, and move ahead. Um, there will be impact. Tourism will get impacted, particularly Kashmir, which used to be one of the major attractions in India. People would think twice before planning a trip to Kashmir, whether it is within India or a lot of foreign tourists also come in. That will get impacted. Related sectors will get impacted. So there will be impact, but over a relatively longer period of time, this will be absorbed, and we will have to accept this new reality, new normal, and then move ahead.
Speaking of impact on Kashmir tourism, it's about $1 billion, 8,000 crores odd. Horticulture exports from Kashmir, walnuts, apple, saffron, etc., are much higher. They are nearly 50,000 crores. So yeah, people say that tourism in Kashmir is impacted, but frankly, given the amount of money that India has pumped in and the other horticulture and other businesses that go on, it's not that people are going to die of hunger there. So there are short-term consequences that we're going to face. Um, and definitely, this is the impact of war. But let's not delude ourselves and say that war just started on 7th of May at 1:15 a.m. This war started all the way back from the time of partition, when Pakistan was conceived based on the two-nation theory, and immediately they went about the task of grabbing territory from India and trying to bring India down. So I don't want to get into that part into too much, but there is war that's going on, and you need you need to actually get strong and project a hard state image and act like a hard state to make sure that war doesn't happen anymore. If we can't, General Ziaul Haq of Pakistan said famously, he wants to bleed India by 1,000 cuts. How long will we let that happen? We can't run fast, become a 10 trillion, 15 trillion, 18 trillion like China is today. If we don't, arrest these kinds of things, and then there's a broken glass theory. If somebody can come and easily hit you at any point in India, then the internal fissiparous tendencies also tend to grow a lot. Um, so I think this government has done great work by even crushing the whole Maoist thing. Why should you have a Maoist rebellion in the interiors of India? I mean, these are all externally funded. So, uh, though I'm not in favor of war, but if the war is being imposed on you, you might as well take the battle and the war to the neighbor's doorstep and inside their घर के घुस में मारना है और घर में घुसना है. We have to do it so that we don't get dragged down in our economic growth. India definitely doesn't want to wrestle with there's a saying, right? If you wrestle with a pig, the pig will be happy, but you'll get dirty and unnecessarily, you won't get about your business. So that's my view. So yeah, Kashmir tourism, minor blip, 7% of GDP, $1 billion, a country of 4.3 trillion, trillion, a billion is not a big deal. So that's about India. I mean, the less said about the impact on Pakistan's economies, the better. They have like piddly foreign exchange reserves. They just can't handle this war without a China or a US bankrolling them. And we know that US is likely to take a neutral stand. So it's up to their Chinese masters to come in. So far, we have not seen them do much in the last 36, 48 hours of the operation theater on the borders.
Yeah, see, China will want to play safe. End of the day, given the uncertainty regarding the tariff issue, China also will want to access the large markets of India for its products.
Yeah,
So unlikely that China will come out openly uh, in support of Pakistan. I mean, by way of waging a war. I mean, obviously, it has been providing all kinds of support to Pakistan. And even if China wishes that all this results in the uh, as you said, supply chain moving to India, uh, not happening. I mean, China would not want that to happen, but then that is not going to necessarily benefit China, because if someone intends to move out of China, they'll move out to India, and if not India, to Philippines or any other place. But China will, I mean, the China plus one strategy will continue. So, long story short, don't expect China to be doing this proxy war for long.
let's see.
And
Let's see. I don't know. I mean, see, that is why China will try to keep the so-called nation of Pakistan alive. And I think India has a golden opportunity to. I mean, you said earlier that it's unlikely to break up, but I hope that it breaks up in the next 2 to 3 years. I'm not expecting in the next 2 to 3 weeks, but the strategy that India is following now of engaging them on their eastern border, whereas on the western side, the Balochistan Liberation Army does its work. Let's hope that the centripetal tendencies, centrifugal tendencies in Pakistan reach their logical climax, because there's nothing holding that nation together other than pure hatred of India and the so-called Ghazwa-e-Hind. So um, that is so. Let's move on to the other interesting development, Manoj, which is the Indus Water Treaty. What kind of uh, economic implications do you think that it is likely to have for India? We know that for China it's a big problem. Sorry, for Pakistan it's a big problem.
yeah,
Uh, but what could happen? What could augur for India in this?
so as we are aware, there have been quite a few hydropower projects that have been planned there, and we've had challenges in executing them uh, because of the Indus Water Treaty. Uh, I do expect that India will not revert back and reinstate the Indus Water Treaty once we return to normalcy, at least not by the same proportion. We will have our cut, and consequently, a lot of water will get diverted to these projects. So, we are likely to see a lot more clean energy getting generated. Uh, Maybe some additional dams being built. So the e- ecosystem there on the borders is going to change. Already, India is investing a lot in the infrastructure on the borders, both at the Chinese side as well as Pakistan. So we'll see more of that happening. Um, and therefore, in the long run, this will actually benefit India. We've given away our water for free for quite a long period, and it's time we get our due.
Yeah, so um, I agree. I think the economic engine in Punjab, Haryana, Rajasthan will significantly benefit if there's a lot of irrigation there. So yes, one should. I think we are already looking at potential beneficiaries due to these developments. It could be pipeline companies, it could be water storage, it could be irrigation, hydropower, and so on and so forth. I mean, a big part of Rajasthan desert could become agrarian. I mean, this is what happened. If you go back, I mean, Bahawalpur is one more area of theater, but the British had actually done a lot of irrigation projects there, and Bahawalpur suddenly became their income grew 3x and it became rich. And because it was ruled by a Nawab who was extremely feudal and who relied on religion, today you see that Bahawalpur, the local guys didn't have the enterprise to do a lot of agriculture. So the Punjabi, a lot of Punjabi farmers came and settled down there. Now today it's the fulcrum of a lot of the jihadi training, etc. It's a very hardcore. That's jihadi center, and that's why with the money and with the Punjabi settlers coming in, there's a lot of that's why some of these terrorist organizations headquarters is there. But anyway, yeah, I'm sidetracking. But coming back, a lot of deserts could become agrarian economies if the correct type of irrigation happens. But other than that, I think today our IT service sector is a big growth engine for us, economic engine for us. I don't see any impact because of this war. Bangalore is reasonably far and safe. So is Hyderabad. And if there, I don't see any challenge of continuity also in case of any blackout, etc. There's enough, uh, uh, BCP DR, as they say, business continuity planning and disaster recovery is a regular drill in these IT sector. So not much of impact in over there. Manufacturing could see some mixed effects. Defense manufacturing definitely will see an uptick. We are seeing stocks in the uh, that supply airplanes, supply ammunition, that supply earth moving equipment, etc., for the army, defense technology. They're all rising, and that could be an interesting sector to watch.
Yeah. What do you think about the impact on India's financial services sector?
Well, we could see increased volatility in the capital markets, potentially higher insurance premiums in the affected regions, and some pressure on banks with exposure to businesses in the border areas. But India being such a large country, we are a subcontinent in itself. I think we are robust enough. Our financial system is resilient enough to absorb these shocks. Particularly that given that our foreign exchange reserves are nearly $700 billion. Um, uh, Pakistan is only 16 billion. But again, let's not compare. There's just no comparison between these two countries.
But a lot of people have been thinking is in terms of how long will this conflict last?
Uh, Difficult to predict. If you look at the past patterns, direct in military engagements have been relatively brief, mainly because international pressure would come in and say, "Hey, you guys, please settle down," etc. The Kargil war lasted nearly 2 months, and that is after the so-called nuclear. I mean, this is something that the Pakistanis keep flaunting about nuclear power, nuclear. But Kargil happened after the so-called nuclear deterrent that both countries had, but that took about 2 months, and unfortunately, India suffered a huge amount of high-quality manpower was lost. Uh, a lot of brave soldiers and officers lost. Today, I don't see that happening. We have fantastic missiles, and DRDO is coming up with newer and newer technologies, subsonic, hypersonic, etc. Our uh, uh, the BrahMos itself, has a range. The extended BrahMos has a range of nearly 800 to 900 kilometers. So you can fire it from the Arabian Sea, and it could go and hit pretty much any uh, part of of Pakistan in a very guided manner. And a lot of drone warfare we've already seen in the last 24, 36 hours. So my view is that India will try to keep the conflict controlled, measured, so-called de-escalatory, and Pakistan if we'll try to show that yeah we have fought and try to create a face saver propaganda internally and try to lie low because they typically work on uh, hitting below the belt, and once in a fair war they will lose, so they will try to keep it after showing some bravado. uh, but I think that's where the India strategy of water, Balochistan, all that should come into play. So that part of the conflict could become fairly long, prolonged, maybe 1 year, 2 years, resulting in eventual breakup of that country. But short term, this could probably last uh, My guess is 2 to 3 weeks, in my opinion. There will be significant losses on both sides till then, but after that, it could tone down. And then Pakistan will lick its wounds, hopefully, hoping to come back and fight later. But if India is smart enough, they will not loosen the noose that has already been kept tight on multiple fronts.
But given that we are in interesting times with Trump tariff tantrums, uh, how do you see these two apparently unrelated issues interconnecting?
I don't think they're entirely unrelated. China is under the pressure of 245% tariff. Um, so, uh, yeah, India is better positioned compared to other Asian peers when Trump announced his reciprocal tariffs. But uh, see, Apple anyway announced that they will move most of their iPhone production outside and bring it to India. And immediately this kind of thing happens. So you can say, put two plus two together here. But and Pakistan in itself might want to scuttle that move. But again, like I said, if we control this war and push the enemy back, we should come back and focus on our business. Um, so India and UK just recently concluded their free trade agreement, and we are seeing that because of that, for example, the Range Rover will now become 50% less expensive in India. Um, the next big tariff agreement that the US is going to launch is with India. And, I'm hoping that in fact, I was expecting that the war will probably be delayed by a couple of uh, uh, at least a couple of weeks, or till this trade agreement kind of uh, gets settled. But I mean, what has happened. So uh, I think the next trade agreement that US will have is likely to be in India, with India. And see, India doesn't have much of trade merchandise anyway to lose, to start as a share of GDP. There's a lot to gain. So our weakness is actually our strength now. So we are geopolitically far from China. If as a result of this war, if it is seen that China doesn't have the wherewithal to bail out Pakistan, that could be a very strong factor for India as well. So China will step back. And so let's see how this thing goes. But the next trade agreement is likely to be with India. And, I'm hoping that it is going to be a very, very positive thing for us.
How do you see this impacting FIIs?
You should tell me, Manoj. You track this better than I. So um, uh, why don't you share your views on this, the FII flows to India?
Okay, so as we have discussed earlier also, Ram, FIIs are very unreliable kind of investors. Yeah, purely because of their size, they have a huge impact on the market, but that has been diminishing over the years. Not many people know that FIIs have been net sellers in 8 out of the last 11 years. And despite that, the Indian markets have continued to grow during this period. The real strength of Indian markets is coming from the domestic institutional investors, and now investments by DIIs has actually gone up, or it is now higher than the investments of by FIIs. So yes, FIIs do have an impact. Whenever they have been net sellers, the markets kind of take a hit, but very unlikely to see that there will be huge outflows and there will be a sharp dip, uh, because all said and done, uh, again, India is an attractive market, and capital chases returns. So given the current situation in the world, if you're looking for a place where you can earn decent returns, adjusted for inflation, adjusted for currency fluctuation, etc., the FIs will be hard put to find an alternative which can offer better returns to than India. So yes, there will be some strategy. They'll want to protect their dollar-denominated returns. They'll want to be invested in safe havens until the uncertainty kind of ebbs. But it is very unlikely to see FIIs abandoning India as an investment destination. And and again, well, it's only a matter of time. It's only when and not if FI is coming back. And whenever FIs do return, you see the markets going up
Absolutely.
because of the
Who's
additional liquidity.
who is giving 6-7% GDP growth year on year? Nobody else. So I think we are fairly strongly positioned there. Let the tariff uncertainty resolve. Let manufacturing start in a big way in India. I mean, India also needs to do a lot of reform on its side to enable that. So that is thing. And as you said, the dollar index has slipped nearly 10.6% from its January peak, and it is trading at a very low level since April. So, I mean, this is actually additional return that the FIs are making, right? As the dollar, again, Trump has his own strategy on dollar. He will want to make China, imports to US cheaper and exports more competitive. So that could also play into the FI playbook as we. What do you think about the rupee move with this? I mean, we just talked about the dollar index, but in general,
See,
given the India-Pak conflict, etc.,
so
where do you think?
typically, as we have repeatedly said, a war doesn't economically help anybody, and therefore, whoever are the parties to war, they will suffer. And to that extent, rupee will depreciate to some extent. Okay, but it's not going to be a very steep fall. Uh, at least that is not what I would think. Going again by past experiences, earlier flare-ups with Pakistan, uh, or for that matter, the fight with China at Galwan Valley, we've not seen rupee weakening significantly, and it's actually gained ground later as the tensions ease. So, uh, and we do have a very uh, significantly large forex reserves. So we have the ability, the resilience to actually absorb these kind of shocks. So on top of it, RBI has been doing a fabulous job of keeping an eye on the various economic factors. It is monitoring inflation. It is monitoring loan positions, credit quality. So we have a regulator who is very, very proactive, and with the intent to intervene as necessary. Therefore, do not see a sharp fall in rupee, at least not on account of this conflict.
Yeah, and oil also, fortunately, Trump is trying to keep the oil prices relatively low. So, in terms of timing of this war, it is kind of helping us. And India also has used the Ukraine conflict to build up a good reserve. And unlike conflicts in oil producing regions, this doesn't threaten global oil supply. So, the other countries are not worried on that count. Any regional instability obviously will create risk premium in the commodity markets. So there could be a modest upward pressure, I feel, um, and particularly if the shipping routes through the Arabian Sea are under strain. I think India has stationed its a significant fleet on the Arabian Sea, but they're not stopping it. It's not easy to stop, uh, imports into Pakistan because most of the fleets are owned by international consortiums. They're not owned by Pakistan per se. And the fleet that runs those ships also, the crew that runs the mans those ships is an international. You'll find people from Korea, from Nigeria, from God knows all kinds of countries on that. So they are truly international. Um, but yeah, if the war really flares up, India could impose a blockade as well on them. So it might adversely impact Pakistan, but definitely not India, in my view. And like I said, India has been strategically building its petroleum reserves. So there's good buffer that we have against any short-term disruptions. And our cess, etc., the elevated oil prices also gives a good uh, leeway to us. And so the
How,
current account
how,
deficit need not be under huge stress. Uh, but yeah, if things get really prolonged, then yes, there could be some, and inflation also could somewhat go up.
what is your view on the defense spending by India? Do you think that this will go up further because of this development?
Absolutely. See, our defense spend is already nearly more than 6 lakh crores. That's approximately $75 billion. And uh, this could further go up. During the Kargil war, for example, India spent nearly 15 crore per day. Uh, if you adjust it for inflation and the scale of the current operations, the costs could be significantly higher. So this is the OPEX part of defense spend. Obviously, it will be high during wartime. But the capex part, the amount of make in India that has happened with organizations like Hindustan Aeronautics, etc., is quite good. But again, there's a huge amount that is still possible there compared to what China and US are doing or France is doing. We purchase our Rafales from France. There's a lot of indigenization that needs to happen, a lot of reform. The engineers in DRDO, HAL are paid a pittance compared to what private companies in the US pay them. So that is something that India needs to really beef up to make sure that uh, uh, we are we continue to be a strong force to reckon with. See, let's be clear. Today Pakistan is uh, initiated war with us, but once India becomes strong, uh, China anyway wants to put us down. Let's say tomorrow, for whatever reason, China becomes unstable and US is successful in taking down China, then USA will not let India rise. So India will. So this whole geopolitical conflicts will always keep happening. Friends will turn foes. There will be, buffer zones. They will fight. The so-called Great Game has been happening in the Afghanistan area since the 19th or 18th century, with the, SAR, the Russian SARs, then later USSR, and so ये चलता रहेगा. इसमें, there's no end to it. Uh, uh, Ultimately, if India can launch a Mars program at a fraction of the cost of US, India can also build a great defense technology and equipment at a fraction of the cost. And we have to become Atmanirbhar in this. We have to really become strong in this. I see defense as one long-term growth sector in India, and definitely worth having a very strong allocation in one's portfolio.
How will the infrastructure spending play out? If we need funds for defense, then are we going to take a hit on infrastructure funding?
Temporarily, yes, but see, like in this year's budget, they anyway said they kind of went slow on capex, because there's already a lot of capex that was rolled out. They said we'll encourage the private sector to come up with. So there are major infra initiatives like the Delhi Mumbai Industrial Corridor. Some of these could get delayed due to geopolitical risk, especially in the border areas. Um, but I think long term, I see India um, definitely infra will continue to go up. If there is damage due to war, then again there's an opportunity to construct, right? So unfortunately, the losses are going to be booked by the government, and the fresh development will get awarded to various companies. So don't mean to sound cynical here, but infra is a long-term growth story in my view. And if additional funding is required, government may issue bonds or raise debt to pump money into these sectors. Uh, so especially border roads, bridges, communication networks, all of this will see a significant growth.
Given all these factors, Ram, what do you make the long and short of it?
See, my view is that the economic implications will depend on the duration and intensity, and which the government is very keen to moderate. So I'm optimistic that the so-called damage of the war will be limited. Though I think that these also create opportunities to build new infrastructure, etc. The US stock market really boomed after World War II kind of took off. It lifted them out of the Great Depression because they manufactured so much stuff, and once the military guys came back from Europe, the baby boom happened, a huge consumption happened. So, everywhere it is a glass half full, glass half empty kind of a thing, and the cycles turn. So, I think markets do recognize that, and that's why markets have been relatively restrained in their reaction so far. Um, and people understand that India is much more stronger economically and militarily. And so that's my view on how this. And uh, would you like to conclude with what you would advise investors to do in this environment, Manoj?
Yeah, I would suggest not to speculate too much in terms of where it is going and what is likely to happen, and not take calls on a day-to-day basis. You let the experts who are designated to handle this, let them do their job. So our diplomatic efforts will continue. Uh, the country is resilient economically, and we would obviously work on a de-escalation of issues once we've achieved our objectives. So there will be regional tensions, and there will be many uncertainties and volatility, which is part and parcel of investing in equities. But the fundamentals remain strong. The country is resilient enough to absorb shocks, and therefore, uh, if you are an aggressive investor, look for buying on dips, and if you are not so aggressive, then just hold tight and ride it out. The long-term story, at least at this point in time, doesn't look to be changing.
Got it. Awesome. On that note, goodbye. We'll see you next time.
Next time. Bye bye.